Okay. All right. So now that we've learned a little bit more about business basics and we have a better understanding of how different transactions can impact the business, we're going to take this a step further and we're going to look at some companies and use this information to help us evaluate would these companies be a business that I would be interested in investing in. Now, as we look at the balance statement, as we said there, our assets must equal our liabilities plus our owner's equity. But we could also rearrange this equation to figure out just exactly how much the company is worth. A company or a business or a house or a family that has assets, those liabilities must be paid first. So we would take our assets, we would subtract any liabilities that we would have, and whatever is left over is left for the owners of the business. All right. So you could think of it as if you owned a house and the house was worth $300,000, but you still owed $200,000 on that house. The money that is left for you would be $100,000. So that is the owner's equity. All right. So we're going to take a look and see what does that look like with a company. All right. So I'm in Yahoo Finance, and I just picked a company, and I picked here Home Depot. Now we're going to spend a lot of time throughout the semester analyzing and breaking down what all of this information means, but we're just going to look at a couple of things right off the bat. First, we can see that right now, one piece of Home Depot is $333 a share. You might look at that and think, wow, that's pretty high. Right now, we can take some of the information that we found in the business basics and use that to help analyze this company. All right. So I'm going to go to financials. And then you can see here, I can look at the income statement, which we'll look at in a moment. And then I'm going to look at the balance sheet. All right. And what I want to know as a company or as an investor, I want to look and see, all right, how much is Home Depot actually worth? So we're going to look at a couple of things. We're going to scroll down here and we're going to look at common stock equity. All right. So again, that would be, that would represent the total assets of the business minus the total liabilities. So whatever is left over for the owners is about $1.5 billion. We got to add a couple zeros. Those numbers are in thousands. Okay. So the company is positive. It's not underwater. It's not negative, which is a good thing. Okay. So we start with that. And then what we do is we go over to statistics and we take a look and see, okay, if the company is worth $1.5 billion on the quote unquote books, remember that company is broken down into thousands and thousands of individual shares. So let's take a look and see what would one share be worth on the books. So I go up to statistics, I come here and I scroll down and I look and see that the book value, if I took the value of all of the shares by the book, so that $1.5 billion that we found, and divided it by all of my shares outstanding, which in this case is $1 billion, you can see right here, it would give me a book value of about $1.33. Right now, the question that comes, and you should look at this and say, okay, why would somebody pay $333 for something that is only worth one point or $1 and change? And so we have to start to think, why do people invest in a company like Home Depot? Strong brand name, business has been around for a while. They're in a fairly consistent and defensive business. People are always going to need appliances and fixing things in their house. Um, so there's that. But there another part, and if we went back to our business basics activity, the second page, we analyzed a little bit on our income statement, and we figured out how much money is left over for the owners of the business, right? So remember, when a business makes money, they have two things that they can do. They can reinvest it back into the business, what we would call retained earnings. They would keep it and improve the company in any way that they wanted. Or they could pay out a portion of that profit to the owners, which we'll talk about a little bit later. So if I go back to Yahoo Finance and I go back to my financials page, I can take a look here and I have all of the income statement information for Home Depot. And the one that we want to look at here is net income to common stockholders. Okay, so it says that Home Depot has, after they've paid all of their expenses, all of their cost of goods, they have $17 billion of net income to common stockholders. That would be people who own shares of the company. Okay, so it would make sense that if a company is that profitable, I would probably overpay for that company. Now, would I overpay for it by almost 300x? Maybe, maybe not. That's an individual choice depending on how you feel about the company. Okay. Now, last thing, if we go back to that summary page and we talked about, all right, so what does a company do when they make a profit? They have two choices. They can retain those earnings or they can give them out to their owners. In this case, the Home Depot is giving $8.36 of that $17 billion dollars to its shareholders for every share that you own. We're going to talk a little bit more about what this number means. So they are actually doing both. They're keeping some of it into the company, and then they are also paying it for their shareholders. Okay. So you're going to use this information on that business basic sheet, help analyze the company, and then think about what does this kind of information, what can this type of information help tell you about the business?